Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related item on these my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. A key reversal up and bullish long white Mariposa on Friday after the previous session's successful inverted hammer pattern. The key recent pattern here is the combined June to July head and shoulders top, which also has a double top formed from the head and the second shoulder. And a dark blue neckline currently at 116.29, just above the resistances that capped the market. These resistances that eroded what in any view is a strong bullish move was the rising green short medium moving average, currently 115.63, the 2019 high at 115.70, and the November 2020 low at 116.02. Further down we have, well, my best description would be limited supports from the February and January 2022 highs at 114.95 and 114.82 respectively, as well as what was once an interesting and very shallow bright red neckline extension to the old August to September 2020 head and shoulders top, currently at 114.51, along with the June 2020 high at 114.22. However, the best support came from the rising mauve medium moving average, currently at 113.74, which wasn't tested, but basically pushed the market back up again. Now, there is an argument that one should look at these last 3 days of last week as a possible bullish morning star pattern of some form, and I could see the argument for that. However, I still think, for now, the larger combined head and shoulders top and double top pattern is the more dominant. Hence, for these patterns, for the head and shoulders, we have a primary target X1 down in the 113.10 zone, with a harder to reach secondary target X2 down in the 111.41 zone. And for the double top, we had a primary target down in the 114.55 zone, something I'd earlier pointed out last week, and a secondary hard to reach target X down in the 113.22 zone. As you can see, the primary target for the double top has already been reached. And finally, as I have said now repeatedly for months and months, we are set up with 7 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year would be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. Now, so far today, a reactionary move lower, though not by much when compared to last Friday's action. We are once again tangling with all the immediate resistances that we've seen overhead. Cable, aka sterling against the US dollar. An immediate countering key reversal up and bullish engulfing pattern on Friday, if only just on the latter, after the previous session's 6th bearish black crow. The base of the move up was the combination of the thin congestion band made up from the December 2020 low at 131.33 and the July 23 high at 131.44. Interestingly, prices punched up and closed back over and inside the breached lower trend line, currently at 132.57, of the mid-April to date expanding wedge pattern, which is currently at 132.57 to 139.36. And that sits within an interesting congestion zone between 132.46 to 132.65. It's not that big. The top side was capped by the March 22 high at 132.98. However, the main recent pattern here is still intact and was untested on Friday. It is the mid-May to late July head and shoulders top pattern with a dark blue neckline, currently at 133.55, and we are still below this pattern. Interestingly, we have in attendance to the neckline just below and adding to its resistance the now flatlining mauve medium moving average, currently at 133.46. So this head and shoulders top pattern, and we have a primary target X now in the 131.48 zone, which was reached on Friday, with a secondary hard to reach target X1 further down in the 129.40 zone. I should also note that last month was a monthly key reversal down here. Finally, much like Eurodollar, we are set up here for this market, to make that rarest of patterns, possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we're beyond. Anything in between, and we'd have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up now to achieve one, though it does look like we're moving towards an annual key reversal up at the moment. So far today, a move up to the March 22 high and down to the Fibonacci support at 132.46, but moving between these two right now. US dollar against the Japanese yen. A very strong immediate countering key reversal down and bearish engulfing pattern on Friday, if only just on the latter, after the previous session's bullish closing white Mariposa and second bullish white soldier. Prices were most emphatically capped by the 50% Fibonacci line for the whole of 2024 at 150.76 and dropped all the way down, notably back down through the combination of the gold flatlining long moving average, currently at 149.5, and the 50% Fibonacci line of the July 23 to July 24 move at 149.61. And all the way down to just short of the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69. Below this 61.8% Fibonacci line, we have the two moving averages of the now flatlining medium moving average, currently at 145.67, and the short medium moving average, currently 145.63, plus the dark blue middle time, currently at 144.96, of the important, large, shallow, and longer term, early July 24 to mid-January 25 bearish shift pitch fall. This is one of two major patterns in operation here. Now the other is the broken bright red mid-January to mid-June descending expanding wedge pattern. This had a break higher in mid-June, though it's more like a stroll higher. The primary target X for this was up in the 150.5 area and was reached last week, though we still have live a secondary, much harder to reach target X1 up at 158.85. There are various congestion levels overhead, stretching from 148.11 up to 153.40, with the three key levels being the pair of 50% Fibonacci lines at 149.61 and 150.76, plus the combined October 22 high at 151.94 and November 23 high at 151.92. So far today, a dip lower towards the moving average combination below, but not coming close to testing it, before a move back up and halting at a lesser Fibonacci line at 148.11 at the moment. US dollar against the CNH, the offshore Chinese yuan. A key reversal down and bearish closing black Mariposa on Friday after the previous session's hanging man pattern. That has been capped by the dark blue neckline extension, currently 721.39 of the late August to early November 24 reverse head and shoulders pattern. That is just ahead of the now flatlining mauve medium moving average, currently at 721.98, and a flatlining gold long moving average, currently 724.55. The dark blue neckline and the mauve medium moving average, along with the congestion at 722.88, which tied in with the lows from earlier this year, between January to March, capped the rise and sent prices lower once more, down through the congestion between 719.64 to 719.91, consisting respectively of the May 2020 high and the 50% Fibonacci line of the September 22 to April 25 move, but stopping short of the flatlining green short medium moving average, which is currently 717.98. Finally, a strategic observation once again, and one I'll continue to be making here. Please note how the gold long moving average has been, despite some up and down waves, relatively flatlining for quite a while, so that if prices do stray too far away from it, then they seem to be brought back in towards it, and that applies in either direction. So far today, a higher open capped by the 719.64 to 719.91 congestion overhead, and a move lower, just below the green short medium moving average, but not too far as prices have turned back towards it right now. US dollar against the Brazilian real. A reactionary bearish black Maribosa, almost a bearish long black Maribosa on Friday, after the previous session's immediate countering bullish engulfing pattern. Prices were once again capped by the declining mauve medium moving average, currently 563.69, and on a closing basis by the bright red upper time, currently at 559.10, of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. This pitchfork has been the showrunner here since spring. Interestingly, the mauve medium moving average is also close to the interesting and significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Meanwhile below, for a change, support did not come in from the shallow declining green short medium moving average, currently 555.77, though it did erode the move lower, enough to close just under it, and above the lows seen over the last 3 weeks. Looking below, we have the purple May 24 to date uptrend, currently at 542.51, which is within a congestion zone below from the 50% Fibonacci line of the April 22 to December 24 move of 544.57 down to 540.16. This congestion also contains the dark blue neckline extension to the June to September 24 head and shoulders continuation pattern. That's currently at 542.45. US dollar against the Mexican peso. A second, this time very indecisive doji cross, which happens to also be a key reversal down, if only just, due to its long tongue and long tail. This comes after the previous session's more straightforward indecisive doji cross. We are starting to establish well over the bright red upper time, currently at 1865.48, of one of the two showrunners here, the robust bright red early May to late June bearish Andrews pitchfork, plus even higher away over the other major pattern here, the many months old and breached many times, early May to late July dark blue bear channel, and that's currently 1836.52 to 1861.84. As I said last week, and I quote, "This is enough of a breach higher that I should start considering topside areas, and these start with the green declining short medium moving average, that's currently 1891.07, followed some distance higher by the congestion band made up from the March 2020 low at 1915.03 and the 50% Fibonacci line of the November 20 to April 24 move at 1920.38. We're also set up now for a weekly key reversal here." And that's the end of the quote. Well, the green short medium moving average was pierced on Friday, but capped the market on a closing basis. And yes, we did end up with a weekly key reversal up last week, and this offsets the quite extensive move follow-on lower from the original move back down below the overhead very wide congestion band that eventually became a rectangle top pattern and is centered on the September 22 high at 2057.65. So far today, not much, capped by the green short medium moving average overhead and seemingly reluctant right now to move too far away from the congestion at 1885.40. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.